What's going on, YouTube traders, investors? Today we're going to look at the top 10 stocks above $100 on the Robinhood app. But before we do that, in the description below, there's going to be a link to Robinhood. If you use that link, you get a free stock, I get a free stock, and it's all good. Now remember, this is totally free. They don't charge you anything. Let's get into the video. Okay, here we are on the 100 most popular stocks on Robinhood above 100. And we're going to get into it. The first one is Apple. Apple really needs no explanation. Just about everybody on the planet knows who Apple is. We'll go ahead and expand it. Apple went on a tear from that December low. I mean, they just went almost straight up. It was unreal the amount that they gained. And Apple as a company, I call it smart money. If you want to grow your money, put it in Apple. I mean, you can't beat it. Apple's going to be around for a long time. Smart money. They're on a dip right now because the market's on a dip because of Trump and the China trade talks and all this craziness. Take advantage of it. The second one on the list is Microsoft, which is another awesome company. I mean, and once we get into them, we're going to expand it and look at this chart. Pretty much the same story as Apple. I mean, this is another smart money stock. I mean, you're going to have your dips here and there, but I mean, Microsoft is the future. Apple is the future. If you want to put your money in somewhere that is relatively safe, minus the dips from craziness, I mean, pretty much Microsoft is another safe bet. Totally safe bet. They're gonna be here for a long time. I mean, as you can see with the chart here on Robinhood, same story as Apple pretty much. Now we've had this dip the past couple days, but that's from the craziness. The next one is Tesla. Tesla, I'm back and forth on Tesla. I mean, with Elon making rash statements and this stock still continuing to hang in there, let's just look at it a little bit. I mean, today it's at 239. It's pretty low. It's one of the lowest times I've seen Tesla. We'll go ahead and expand it. And this year chart is going to show you the volatility and the choppiness of this particular stock. And right now we're on a downtrend. We're on a downtrend. We're well below that 200 moving average, which is the orange line right here. One thing I say for Tesla, you can either look at it as an automobile stock and rate it with Ford, GM, and all the automakers, or you can look at it as a technology play, technology stock, which, I mean, I think the market is having a hard time determining that. And with Elon coming out and saying the things that he says, I mean, this is what you get. So, would I invest in Tesla? I'm gonna have to say no, just for the simple fact, I don't look at it as safe money. If you're a serious risk taker, Tesla's for you. And the next one on the list is Facebook. Now, Facebook is a money maker. Is a money maker. They had their privacy issue, which we're about to get in the chart. Let's check it out. Sitting at 188 today. And this is another one that's went on a run since the end of last year. And the thing about Facebook that you need to know is, yes, they have their privacy issues. They're working on it. But the main thing you need to know about Facebook is it is a money maker. They have zero debt. Let me say zero debt. Money, money, money. Now you're going to have to deal with Mark Zuckerberg and what he has to say and here and there. And to me, I look at if the company's making money or if they're not making money. Facebook is making money. The next one on the list is Disney. And I'm super excited about Disney because when you see a stock do this, Disney was pretty much known as like a value stock until recently. Now you can go and put that in the growth category because of streaming and their original content. I mean, talk about streaming wars with them, Netflix, Amazon, AT&T, and several others out there. The streaming wars are about to be on. But let's look at Disney. And we'll expand this chart. Robinhood keeps getting better and better. Now, you see their 200 is on a steady climb. 200 moving average, steady climb. And really, right in here is where they had announced their streaming service. And the stock took off like it was at like 110, 112, shot up to in the 130s. And it's still continuing. I mean, like I said, everything's on a dip because of all the craziness right now. But this stock is headed north. No doubt about it. With all the original content, they're taking everything from Netflix. They're starting their own service, Disney Plus. They got ESPN. They own the majority of Hulu. So look out for Disney. It's more of a growth stock now. And the next one on the list is Amazon, the beast. I mean, it's another one that everybody on the planet knows who Amazon is. And we'll get into the chart. Today it's sitting at 1876. Let's go ahead and expand this. And it didn't do quite like, your Apple, your Microsoft. It kind of came up and consolidated a little bit and then took off. Amazon, we all know, is an expensive stock and is typically held by the institutions. On Robinhood, you can't buy fractions. So, if you got $1,800, almost $1,900, I mean, the biggest deal is you don't look at the amount of the stock unless it's a penny stock. I don't advise penny stocks, but you look at percentages, the percentage that you're going to make. That was one of the hardest things with me. So, I mean, I personally, if I had more money, Amazon would be part of my portfolio, but I have a smaller portfolio, and if I ever get to the point, I definitely want Amazon in my portfolio. And if you got the money, get in Amazon. It's gonna be here for a long time, and it's another one that's destined to go up. Next on the list is Alibaba, Chinese stock. They're like the Amazon of China. So probably better. I don't know a lot about Alibaba. I don't know a lot about the Chinese stocks. I just know that this one, we'll go and get into the chart. Today it's sitting at 178. We'll go ahead and expand it. Like I said, I don't know a lot about it. I know it's super popular though. I've heard a lot about it. And if you see, it's pretty much been on the same path as most stocks at this point. Quality stocks, which I would say Alibaba is quality. You can see they're on that dip. This definitely is because of the China trade talks. I mean, like I said, it's in China. So this might be an opportunity if you feel like that this China talk drama stuff is eventually going to get solved. If that gets solved, all the stocks are going up, especially this one. So check out Alibaba. The next one on the list, Nvidia. Nvidia is, when it comes to GPU processors and video cards and stuff like that, they are top line, definitely top line. We'll go ahead and break down the chart. This is one that that didn't really move like the Apples and the Microsofts and stuff like that, because semiconductors were so low. I mean, they were having that cyclical down. But this is one I think that has a lot of potential, because of where it is, what they do with artificial intelligence, and in those autonomous vehicles. Nvidia is an autonomous play. Maybe not in the short term, but in the long term, Nvidia, autonomous, go together. And number 9 on the list is Netflix. Netflix. I mean, it should just be Netflix parentheses market share, because that's what they're going. They got the name, they got the market share, but they got a bunch of people coming after them. They're gunning for them. And like I talked earlier, Disney, Amazon, Apple, AT&T, they're all gunning for Netflix. Netflix today is sitting at 362. We're going to expand the chart. And Netflix is one that I just don't think they're worth $363 a share. They're not making money. They're spending money. Their PE, the multiple is through the roof. So I just don't know. I think Netflix days are limited. I would not invest in Netflix. Not right now. Not unless something comes out that shows them continuing to be the leader through these streaming wars. I mean, they did have that. They were the first one to really surge back after the dip, the correction in December. But since then, it's kind of been rocky, because you got everybody else gunning for Netflix. I'm not buying Netflix. And the last one on the list is going to be an ETF. I'm not a big ETF person, so I really can't speak on ETFs. I see the concept of ETFs for people that don't want to get in and research stocks and everything. They just want to throw their money in the ETF and let it ride. That's not me. I'm not saying it's a bad thing, but I mean, people have busy lives. So if you want to put your money in ETF and just let it go, let it go. We'll go ahead and look at it. I don't know that much about it. $264.98 Vanguard S&P. So I'm guessing this tracks the S&P 500. VO tracks a market cap weighted index of US large and mid cap stocks selected by the S&P committee. Yeah, so basically this probably goes off the S&P. We'll expand it just to see. It'll probably tell the same story. There was that dip into December, and it roared back on a dip because of the craziness and Trump and China trade talks, which I think is going to get settled. I think China needs this more than we do, so I think it's going to happen. But this is the last one that we're looking at. If you want to be safe, don't have time to really delve into stocks, put your money in an ETF. Can't go wrong. With that, that's going to be the end of this video. Like, subscribe, hit that bell, and in the description below, there's going to be a link to Robinhood. If you use that link to sign up for Robinhood, you get a free stock, I get a free stock. It's all good. Robinhood is an awesome trading app, and it's totally free. So, till the next time, see you in the next video.